Where is there an opportunity to qualify resistance and support in the same, I don't know, couple minutes? If you take a look at our green dotted line, which is our PWAP, position weighted average price, price comes in and then backs away. But it's kind of too late to get short down here. If you want to get short up here, you're going to see a couple things. You're going to see number one, really good potential resistance. Number two, a buy pulse that gets rejected. And number three, our laser go red to green, which means more longs versus more shorts. And sure enough, I back it up underneath there. That's when all those things happened. It goes from red to green, meaning more shorts than longs to more longs than shorts. And our chaser over here goes from more buyers, more future buyers versus future sellers to more future sellers to buyers. All those things are indicative of qualifying good resistance. And then once it does go down all the way to potential support, we get the opposite. Potential supports our red dotted line. You get a pink box, which is a sell market order. Sell market order means a bunch of sellers come in. Price isn't really going much lower. So if it gets above that, chances are it's a rejection. That's just number one. You got more longs than shorts. That's bearish. If that flips, it goes bearish to bullish. And then the same thing with our chaser. Right at this moment, there's more future sellers than buyers. When and if that changes is when you have to go from bearish to bullish. And it does change. It changes, starts to change right in here, 800 to 300. This is going to become even or balanced. This is going to become even or balanced, meaning from green to red. When those things happen and it starts to get above this pink box, which means it's rejecting a sell market order or rejecting sellers. Look at all these things now. Balanced here, balanced there. So now is the moment to say this could be qualified instead of way up here. But you're anticipating these things and then seeing them before they happen. So if you get long in here versus up here, or if you get out of a short in here versus up here, remember, you're qualifying by anticipating with the right tools. Let me back it up. Number one, you're like, hey, if this red line does work as support, it could show me rejecting this pink box. This green line gets shorter, and this gray line gets shorter, which are the things you'd want to see to go from weak to strong, from bearish to bullish. Boom. See that shrink right there? That green line, gray line shrink. So I pause it. Trading is about taking shots, but not just erroneously without aiming. It's not just taking shot, 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 shot. No, it's taking a shot that you've already lined up, that you're ready for, that you aimed for, and it's the ready aim fire. Take a shot. Does it mean you're going to hit the target? Doesn't guarantee you're going to hit the target, but you've stacked your probabilities that you could hit the target. But you have to take the shot at some point. You just want to stack the probabilities. And then you to put yourself in a position not to waste the ammunition. Most people waste their ammunition when they don't know how to fire a gun or when they don't know how to trade their account. The ammunition are your rounds in shooting, it's your capital in trading. You're going to miss targets when you shoot. You're going to lose money when you trade. But if you're taking good shots, then you put yourself in a position where you're not wasting ammunition or capital. Most people don't even know what a good shot is. They don't even know that um, they have bad aim or they're just not ready, using the wrong gun, aiming at the wrong target, something in their stance. All the different other things that a good instructor could show you without having to spend a ton of time with you versus a guy who doesn't know much about guns himself. Most people who are trying to help other people don't know much about trading themselves, let alone be able to connect with someone and saying, hey, in an era or environment where you could have assistance, you got to be able to understand what the assistant's telling you, whether it's an AI assistant or being able to put in the proper inputs and then understand back how you're going to manage your risk or manage your capital and understand what type of risk or what type of rewards could be expected for the type of risk you're taking. Got to have both sides of the equation. But to take a shot and then look to see what happens is what's important. If you just open up a long down here and then fall asleep and take a nap and hope it goes up here before it goes down in here, it ain't gonna work. You got to watch to see if it hit the target, where it hit the target, if it's in this shooting at the range analogy, there's a lot more that goes into analyzing whether or not it was a good shot. But staying on top of the trade and realizing that if I have the right tools to read before I get in a trade, it's the same data and tools to read while you're in the trade. And sometimes it's the opposite to get out of a trade that got you in the trade. If you're looking for more shorts than longs to get you long, and then once you're in the trade, more longs came in, well, that's opposite what got you in. That's good because you don't want a lot of competition if you're long. I could tell people that 100 times in 100 days, and it still might not click. But you don't want competition. And that's the difference between the right tools and the wrong tools and the right inputs versus inputs that don't really matter and are irrelevant. And also remember this last thing. It's the simplest. Why didn't I think of that? That's generally the best tool.